and get started as the rest of our attendees roll into the room. We have a great event for you today. Thank you for joining us on our 10 Capital Quick Pitch. We have 3 great companies that are going to present for you and 2 awesome investor panelists. For the audience members, if you have a question during the session for any of our founders or our investors, go ahead and drop them in the chat box and we'll try to get to them as best as we can with the time. And with that, I'll go ahead and pass it off to our CEO, Hall Martin.
Thanks, Shane, and I want to thank everybody for joining us today. We have a great round of startups to pitch today, and wanted to, if you have any questions in the audience, feel free to put them in the chat box, and we'll try to answer those as we go along. So with that, we'll have each presenter have 20 minutes to do a pitch and answer questions, so we should have time to get to everybody's question in this round. Happy to make introductions afterwards for those who are interested. Our first one is going to be a little bit different. It's not a startup raising funding, but a startup with an interesting technology around ChatGPT and search that we would like to put out there to you, get your feedback on how that might be used and where it might be used as a license or an acquisition. So with that, let's bring up Aaron. Aaron, if you could go ahead and turn on your video and show your slides and give us a short introduction to the Big Fish product called Squint.
Howdy, everybody. My name's Aaron Lyman, and I'm the founder and president of Big Fish Design in Austin, Texas. I went to the University of Utah and graduated in industrial engineering, and actually put myself through college writing software. It's a software development in the 80s, which was kind of hard to do. But I eventually, after graduating, I entered the semiconductor industry and eventually became VP of worldwide sales of Sigmatel here in Austin. And we had a very successful IPO and a lot of fun. And I eventually left that world and first started my foundation, Austin International Rescue Operations, or ARROW. It's a charitable foundation here in the US and Indonesia. And we build boats for tsunami victims is how we started doing that. And then there's also, I started my software company, Big Fish Design. And so Hall touched on it. We're looking to sell or license our patent IP. And really, we have a patent that's recently been awarded called Application Software for a Browser with Enhanced Efficiency. It's on the App Store now. Or we'd like connections into some of the power players in these markets. It's the other thing we would be looking for. So really, what's the problem? The problem is really data overload. When I first got my first tiny iPhone, I realized this was a hard device to really browse the web. It was pretty much useless. So basically you're slammed with information, most of it you don't care about, and web browsing was just not much fun in those days. Still is not. I realized that if we could really give the user control of your data stream, you're able to slow down, eliminate distractions, and really be more efficient. So we built Squint Browser to give true control to users, okay? So the million-dollar question, does Squint improve the browsing experience? Okay, I'm gonna show a demo now. Ask yourself that as we look at this. All right, go ahead. Okay, so here we are, we're gonna browse the web here and grab a cup of coffee, and it's gonna take a while because we're gonna sit down, if you're like me, and we're just gonna kind of look around and try to browse the web, maybe find something of interest. So we realized that this was really an inefficient way of finding information, especially if it's a very small device. So we came up with the idea for keywords. And what you've got is various keywords, things that matter to me. And we can snip them. So we're going to snip Biden and Trump just to be equal. We don't want any politics right now. We can, all these various things, any language, we give them a color. So like for Texas, I can give it a color. I can mark it, we call it, in the color. I can snip it, which is really just blocks it out of the page. or I can warp it and change things up. Why? Because we can. It's good for translations, nicknaming Facebook friends or celebrities or your things like that, because we can mostly. So we're going to save that. Now we're going to do the same thing. We're going to now browse again. Only everything we see here is going to be highlighted on the page. Here, it's a little slow with the simulator. So now we find everything within the page. Biden snipped. I don't need to see this article about it. Here's something about China, and it also organizes and brings together everything it found in the page on the side panel here. We can easily get to what we want to look at. So you get the idea. Instantly, I find something of interest to me. It's very nicely designed and very easy to read. So we'll just bounce around and try it on a few areas. So let's try it on My Yahoo. Anybody remember that?
No.
The old My Yahoo. I love it. It was a way to get your data all organized in a particular way, and it was our first really big app that we used this on. So it works in the same way. You see, everywhere we go, there's something about ChatGPT, which I would like to see. Or I can just go over here and all of my data is formatted and organized for me instantly. Okay, try another one. How about Google Drive? Oh, does it work on Google? Yes, it does. It works on almost anything Google. We'll try it on Google Drive and Google. If you can run it in a website, it usually works. And not just works, runs and runs well. So here's all my content. Let's take a look at, what about different languages? Let's try. So I added the keyword for baseball in Japanese, and you can see it powers through, finds all my content, organizes it here. If I see something that's interesting to me, I click on it. Here's something from Yahoo. This whole page, it instantly finds my content on every page. Now, it searched 1,038 elements. It found 1 out of 24 of my active keywords, did it all in 0.018 of a second, and it found 10 total results. So it's just a powerful local search engine. And when you use it in conjunction with something like Bing or Google, it's remarkable how great it works and how it makes you more efficient when you do that. So we'll look at one more example, Google Keep. I think I had that one here. It was here. Well, Google Keep is of course you can get to it here, right? Google Keep is a note-taking app. But if you haven't used it, it's remarkable. It's like Evernote. Evernote works great as well. Again, it works great. It works on any language. And remember, don't get caught up in the color, because it's kind of a little bit overwhelming sometimes. Anytime you want to, you tap on the squint button and it is instantly removed. So the last thing I wanted to try was ChatGPT. We'll see if it's up today at this moment. You never know. Oh, has any of you ever used this new cool device? So Squint is the perfect companionship. Whoops. Perfect companion application for ChatGPT. It just works great. It always works every time. It keeps, when you're using it, you can have this train of thought, that this flow of information in your mind, and it's hard to keep up with the amount of data that it generates. Squint handles everything and coordinates it all. Okay, so that's the demo. So let's ask again. Did you see the demo, and did you decide whether it increases your efficiency?
Let's ask questions from those on the panel. Akeel,
Yes.
what questions do you have about this so far?
I mean, so far, from my understanding is this is kind of more of an advanced filter system while I'm browsing the web to kind of eliminate and kind of give me more clarity on what I'm browsing. So it kind of filters out a lot of the noise for what I'm more interested in.
Yes,
I mean,
it both filters it out and also highlights it and brings it to you. So it does both. It either eliminates the distraction or it highlights it to get you to your content faster. I want to tell you, so what are the volumes here? So why would we do this? Because volumes are huge. Every single device you see has a browser, and 4.7 billion in the world. The number of people that are, we call them sophisticated users, are the ones that actually would use a different browser, like Chrome user or somebody like that, that's not the original browser. And that's 600 million users. When we did our product, we now have 25,000 downloads. It's not really a business yet, no, but we also have been awarded a US patent, but it has shown us validated our vision. It runs in any device, including in the car. So you're driving down the road, you just say, squint New York Times, and instantly you are being told all of the news on the New York Times. With one more question, you say, please read everything. And it reads all of your content, not everything else, just your content off of whatever website you're on. So it's all voice driven in the car. You get the web in the car, browsing as you drive. Oh, that's impossible. No, it's not.
So we have two questions for you. First one is, currently browsers collect information on your preferences to highlight content you're interested in across websites. How is this different from that?
Because this is real time. So as we set up, let's go back to as we set up the keywords, these keywords follow you everywhere you travel. It doesn't go out and search the internet somewhere else. It does it real time on every page you visit. So that's why it's different. You get instantaneous idea of what's on that page, and it just makes you faster. It's not like Google notifications or alerts where it hits you who knows what time of day or night. Oh, there's something out there. Do you want to look at it? No, this is very focused. And you're going to the websites that you care about anyway. And
so the next question is this implemented as a browser extension?
It's not yet. Right now, it's just an iOS standalone browser on the App Store. That would be.
Is it intended to be an extension?
Well, yes, we would like to move it as an extension. I think it would be an awesome extension on Chrome. We have not done that yet. Right now, it's standalone only.
Next question is, congratulations on the patent award. Squint runs on the local device only, or is there a version of this application running in the cloud as a SaaS application?
No, it's individually runs on each device. There's actually no, right now, there's no sign up. There's no account. You just use your own Apple account, open the browser, and any keywords you use, you want to delete them, they disappear. It's all local on each device. And that's why there's
based on
security is 100%. It's based on WebView. It's the WebView from Xcode. It's an Xcode function web view that gives you the browser window.
Hal, are we supposed to type the questions in or just ask them?
You guys on the panel can ask them. Those in the audience need to
Mhm.
type them in. So Jordan, what are your questions?
So Aaron, what's the punchline? Where are you going with this?
Well, what I'm saying is that it's really a great intellectual property that we'd like to sell. I think it would be a great application to augment the many browsers out there.
Yes.
It would be very, very good in the car. It would be, there's a lot of places where this could be sold and licensed. And it really improves what you're doing when you're
Very good.
browsing.
So
Yeah.
Aaron, you have you've used a lot of time with the demo. Why don't you take us through the presentation so we can give you our feedback? How do you feel about that? Is that it? Is that you want to do the slides, sir? I'm asking.
There are a
don't
lot of
understand
slides
the
there.
question.
We only have 4 minutes left, so it may be difficult to do much with the
Oh, in
slides. I think people get
total.
the idea of it at this point. It's a piece of code. You've got a good investment into it, and it's looking to see where it might go out in the world. So we're looking for some ideas from people as to where it might go at this point.
Aaron, just question on the terms of usage. So you mentioned there's about 600 million sophisticated users from that. You guys got about 25,000 downloads. I see back in 2017. What was kind of the active usage did you see from those 25,000 downloads?
What kind of active usage did you say?
Yeah, did you guys measure the active usage of those users?
Yeah, we had, it's fizzled out a lot right now, but we were, I mean, the analysis is pretty deep. We were getting people to stick around. I guess I'm not sure what you mean by the active users, but
Of the 25,000 people, how many are actively
Yeah.
using your product?
yeah, we had right now, not very many, but 100 in the hundreds. We were having about 1,000 active users per month
Okay.
within about last year. Yeah.
But in
1,000.
2017, we had 25,000. How many of those were active users in 2017?
Probably about the same. I don't know. I can go back and get all that data, but it's
Okay.
the thing is, it's hard to maintain consistency and usability with it, and to add users, because it's really, it's $1.99 on the App Store, and people who use it love it. But it's, a lot of the marketing is a costly affair. So that's why we're looking for help. It's just about as costly to build it or to market as it was to build it.
You got it. So Aaron, I'll give you my 35-second review because we're running out of time. The presentation was okay. The initial demo was a little clutchy, but that's something you can work through very well. I recommend a lot of rehearsal on the presentation. I got the point across very quickly. Thank you for that. You do come across as 1900s, 2000 style. You want to bring your presentation up to the 2023. I like it. I think you got great potential, whether it's an add-on, an extension. I like the verbal, the audio, where you could put it on Alexas and all these things. That's great. That is awesome. High potential in my mind. I would love to see and talk to you somewhere.
Great. Okay.
Thanks, Jordan. Akeel, what's your take on this?
I mean, I think it's hard to visualize right now the kind of monetization of this model. I think if it was maybe through a Chrome extension, I feel like it's more of a freemium type model, and then maybe some kind of monetization through if you can kind of get to a bigger market. But at this time, I think maybe it just needs a little bit of work. But I think it's neat. But I think I think that model might work better at this point. But look, cool product.
Yeah.
Yeah.
Thank you.
Well, the
very
feedback
much.
from the chat box is that Google has decided that ads are the business model of use today, and so ads should be the business model of use here. So that's one perspective there as well. What do you guys think about ads as a business model?
Straight up,
That's
I
work well.
I'm not in for the ads. This is a great licensing. There's many applications, not necessarily on the consumer side, but the enterprise class. That's my quick answer, Hal.
Great. One more feedback from the audience is if it could screen out junk, I believe this could have a use in academic research arena, specifically sequence code. So we could also think about this not only as pulling out information, but also screening out information. That's an interesting take. Appreciate that.
Well,
What do you think
that's
about that, Aaron?
exactly the thing. I mean, right now you'll see all kinds of ad blockers, right? Everybody's got an ad blocker. What does that really do? What it does is it blocks these little squares in the page that this is my you're probably never going to click on that anyway. And so we actually block the content in the page, not those little blocks and little side advertisements. We block the content right within the page.
Okay.
And that's why I think it's really an exciting way to do it. Because it does not, yeah.
Well, we're at the end of our time, Aaron. Thanks so much for your presentation. We'll connect you with the interested parties afterwards. But with that, let's go and move to our next presentation.
Good job, Aaron.
Thank you so much.
Bravo.
Thanks,
Thank
Aaron.
you so much for that. Next up, we have Dominique of Be Generous. Dominique, can you turn on your video and share your screen?
Yeah, hi everyone. Can you hear me?
Yes,
Pretty
sir.
fine.
Wonderful.
Yes.
So I am in California and we've had torrential rain the last week. So I think that my internet's been damaged somehow. So if I freeze up on you, I'm here and it'll come back in a second. Just letting you guys know.
We will be generous and forgive you. Don't worry about it.
Thank you. Thank you. Okay, great. Can you guys see my screen?
Yes, we can.
Okay, well, I'm going to get started then. Hi, everybody. My name is Dominic Combs. I'm the founder and CEO of a company called Be Generous. And by way of quick background, I was born in China, grew up in London, England, lived around the world, eventually made my way to the United States, went to university and grad school in New York City, did a master's degree in economics at Columbia University, ended up on Wall Street for a few years, and then was sort of bitten by the public policy bug and decided I wanted to go into the social impact space. So I worked as a political and economic advisor to the Afghanistan ambassador. During the war in Afghanistan, I was a diplomat. And then I worked as a senior economics advisor to the chairman of the Senate Finance Committee on Capitol Hill. And I realized after having spent years on Wall Street and years in the government, that if I could somehow combine profit and purpose into a single entity and live at that intersection, I could do a lot of good in the world and make a sustainable living, which was important to me. And so I embarked on what then became a 10-year-long career in building private venture capital-backed technology companies that are nominally fintech companies. And in reality, they're philtech companies, philanthropy technology companies. And so this is my third company that I've run. My first company is a company called Global Philanthropy Group. I was head of business development there. We were the #1 philanthropic consulting firm in the United States. We got acquired in 2017 by a billionaire named Todd Wagner, who is Mark Cuban's business partner. Second company is a venture-backed tech company called Giving. Forbes called us the Shopify for nonprofits. So we operated a similar platform to Shopify, but starting an e-commerce store, we started a nonprofit. And now I've started Be Generous. And Be Generous is really, really interesting. So we've created the first ever philanthropic credit product, which instead of allowing somebody to buy now, pay later, allows somebody to donate now and pay later. So the buy now, pay later space has exploded in growth over the last 10 years. There's $350 billion of buy now, pay later loans outstanding globally in the world. 1 out of every 5 online transactions in the United States is purchased using a buy now, pay later loan. And 60% of Americans have used a buy now, pay later loan to purchase something over the last year, according to the Consumer Financial Protection Bureau. What most people don't realize is that there's an equally sized market to the e-commerce space where most of these buy now, pay later companies operate. So if you look at a firm, Klarna, Afterpay, WePay, Sezzle, Split, most of them are in the e-commerce space, which is a $500 billion plus annual market, and it's saturated with credit and lending products. Well, the philanthropic market in the United States is almost the same size as the e-commerce space and doesn't have a single credit and lending product. And so I'm good friends with the co-founders of Affirm. I was inspired by their story and their success. I shared this idea with them and they said, hey, this is really smart. And our first investor, in fact, in this company is the co-founder of Affirm, Hoi Lin. So with that, I'll get started on the presentation. So Be Generous is a fintech and credit solution, as I mentioned, for the largest underserved sector of finance in the world. And we've created the first ever philanthropic credit product, which is an embeddable credit product or donate now, pay later button that sits on a nonprofit's website and allows a donor to donate now, pay later. And I'll explain what that means in a moment. We've raised a $10 million seed round from some of the leading fintech VCs and angel investors. Some of our lead investors include the CEO of PayPal, Dan Schulman, the co-founder of Affirm, Horizen, and the chairwoman of FICO, Joanna Reese. We've also received capital from some of the big venture funds like Transcend Ventures, which invested in Klarna, Canaan out of Menlo Park, ATX Ventures, one of the big VCs in Austin, Texas, Higher Ground Labs, and Lifeline Ventures in LA. We signed $+ facility with Drake Bank, which is a bank in Minnesota that basically powers these unsecured consumer loans. And we signed a revenue and sales technology partnership with Blackbaud, the world's leading software company powering nonprofits. And in fact, the president of Blackbaud actually invested in our company as well. We were named as an LA Rising startup, startup to watch in the future 5 of LA Tech by the Business Journal and Built in LA, and recently named by Nonprofits Hub's top 2023 trends you need to know. We've been featured in a lot of major press publications, from Axios to American Banker to Yahoo and so forth. And in our first quarter in the market, we had an unbelievable launch, and I'll get into those numbers in a moment. So the market for nonprofits is very big. It's about $500 billion a year. It's enormous. The problem is today, less Americans are donating, and they're donating less on average. And that's, of course, causing a liquidity problem in the nonprofit space. And so how do you incentivize people to give more and more people to give when already the vast majority of Americans are saying, I actually want to give more, but I'm unable to do so because of my cash on hand? So last year in the United States, a study was put out by Fidelity Charitable, the largest donor advised fund in the United States. It's a great study. It's called Overcoming Barriers to Charitable Giving. And in the study, they concluded that 72% of Americans say they want to give more money to their favorite nonprofit, but are unable to do so because of liquidity or cash on hand. At the same time, 67% of them say they're unwilling to put that donation on a credit card because of interest payments and late fees and digging their credit utilization score. So the question is, how do you incentivize people to do this? And we've created a free credit product. This is completely free to the donor, where donors can basically pay in installments while the nonprofit receives all the money up front. So we call it a point of donation loan, and it's an instant credit granting process for donors that is embedded in the donation flow. And as I said, is the only product in the world which allows someone to donate now, pay later. Our product fundamentally solves 3 problems. Solves the time value of money problem, which is that money in a nonprofit's bank account is worth more now than it is over the course of a year, especially in a high inflationary environment. 2, it completely eliminates donor cancellations for monthly giving and pledge defaults. So it's very unusual where I can make a claim that a product will eliminate a problem, not just make it better. But one of the biggest problems in the nonprofit space today is that 50% of donors who sign up to give monthly and sign up to do pledges don't end up fulfilling those contributions and actually end up canceling. And it causes huge headaches for the nonprofit. And there's all this overhead the nonprofit needs to chase those down. Using our product, it eliminates those problems because the nonprofit receives all the money up front, and our bank lender takes the loss if the donor stops paying over time. And third, and perhaps most excitingly, in addition to getting the money up front, being insulated against any downside loss, it increases the average donation value substantially. So if you look at the buy now, pay later space today, they'll tell you, hey, we can increase an average order value of an e-commerce transaction by 80% plus. We were hoping to see numbers like that. Turns out when you actually allow a donor to finance a charitable contribution, they don't give a little bit more, they give substantially more. So the average online donation last year in the United States was $128. The average donate now, pay later donation is over $400. So it's close to 300% bigger, substantially more. So nonprofits are getting a lot more money using our product. And this is how it works. As you can see, this is the Red Cross. A donate now, pay later button sits on their website next to their normal button. So it just looks like a normal donation button. It's directly on the nonprofit's website. A donor then goes and says, hey, I want to give the Red Cross $1,000. And basically they're run through Ekata and Socure. So we're verifying their identity, doing an AML KYC check. We're doing a soft credit pull to verify their credit worthiness. All of this happens in approximately 1.5 to 2 seconds. It's virtually instant. We do not ask for any PII like social security numbers or anything like that. And the donor is then presented with options on how they can basically pay this contribution over time while we fund the nonprofit up front. So in this example, this donor can choose a 3-month payment plan, a 6-month payment plan, or a 12-month payment plan, and it's completely free for the donor. No interest payments, no transaction fees, no hidden fees, and no late fees. So we're literally taking that $1,000 and just spreading it out into an installment payment plan while we fund the nonprofit up front. And lastly, once the donor accepts their plan, the funds are transferred to the nonprofit. And importantly, this triggers a full tax deduction to the donor. So the donor receives a full tax deduction for $1,000, although they haven't spent any money out of pocket today. And we're the only company in the world today deduction without them. And then in 30 days from now, depending if they've selected 3, 6, or 9 months, that, the equivalent essentially transaction will be debited from their account. So here I mentioned the average donation on our platform is $470. The average online donation last year in the US was $128. It's almost 300% larger, or almost 4x larger. So donors who use our product give substantially more. Here's just an op-ed we did with Cranes about one of our clients. Here are some case studies. I'm not going to run you through the case studies, but you can see that there's a lot of case studies about the applicable nature of this product. You can also use it to finance gala tickets, for example. So a lot of gala tickets are very expensive. That's more of a buy now, pay later use, but it's very popular on our platform. And you can also use it to replace monthly recurring donations, or even to extend a line of credit to donors when they're bidding on auction items at galas, for example. So we have some great testimonials from folks like the chairman of the board of the ASPCA. That's the largest animal rights nonprofit in the world. He's one of our investors. The president of Blackbot I mentioned is one of our investors. These are just some, CEO of UNICEF, CEO of the Girl Scouts, chairman of Boy Scouts, United Way Worldwide. Here's some of our press coverage, recent press coverage. And then our traction and our business model. So this is our traction slide showing sort of what we've done since launch. But I'm actually going to focus you guys on this slide. We launched 90 days ago in the market, and in the first 90 days in market, we signed up 80 nonprofit clients, processed $250,000 plus in loan applications through, it's actually now 501 applications. This is a couple of days old. The average loan size, as I mentioned, is over $450. And we have a 0% default and 0% delinquency rate, which is quite exciting. It means our credit box is working. And importantly, we approved over $1 million of credit to donors. So we had a really, really exciting, solid launch. Signed a partnership with Blackbot, as I mentioned. This is Blackbot. This is the president of Blackbot who gave us this great quote. He said, donate now, pay later is going to become a must-have option on every donation page across the nonprofit industry. So here's a visual representation of some of our clients. Our bank is Drake Bank that gave us the credit lending facility. We also signed an LOI with Forbright Bank, which is another bank who gave us another credit lending facility, although we haven't exercised that one yet. We make money by charging a transaction fee on each donation. So as I mentioned, this is completely free to the donor. It doesn't cost the donor anything. The nonprofit pays a transaction fee. The gross fee that the nonprofit pays is averaging out at around 12%, but we offer something called donor cover, and this is very important. So in the nonprofit world, it's almost universally applicable that nonprofits offer something called donor cover. So if right now you go to a nonprofit's website, you go to make a donation, they'll say when you go to check out, would you like to cover a percentage of the transaction fees so the nonprofit receives more of your money? We offer something like that as well. And we have an 86% opt-in rate. So our donors 86% of the time opt to cover transaction fees, which means that the net fee that the nonprofit is paying on each transaction is about 7%, which is very much in line with most of the online digital payment platforms out there. Some financial projections. This is our team. That's me, of course. And we have Neil here on the line as well. Our CTO is the former global head of digital infrastructure at Ally Bank. Before that, he was at MasterCard, and before that was head of digital payments at PayPal. Here's our advisory board. It's former chairman of the FDIC, former chairman of the board of American Express. Both of them are investors in the company, co-founder of Affirm, chief risk officer of QuadPay, chairwoman of FICO is an investor, and so forth. Nonprofit advisory board, many of these are investors as well. And here are some of our venture capital investors: 116th Street Ventures, the Husseini Group, Transcend Ventures, Canaan, Wilson Sonsini, the notable tech law firm, and so forth. And we've raised $10 million. We're raising a total of $13 million. So we have $3 million outstanding today. And here's our roadmap. So thank you very much for listening to the presentation.
Great. Thanks, Dominique. Jordan, let's start with you. What questions did you have?
Just taking notes right now. Skip me for half a second, please.
Okay, Akeel, how about you? Any initial questions?
I'm just looking through it right now. Just give me a second as well. So if you feel, I'm curious, what are you looking for here today? It seems like you've got good traction. You've gone 10 million. You're close to closing this round. You guys got good traction. What are you looking for here from our side?
Just looking to close the last 3 million. And so we stopped capital raising for a long period of time. We raised that 10 million and then basically didn't capital raise for like 6 or 7 months. And recently we went into the market, got our first quarter KPIs back and shared them with our investors. And our investors said, hey, these are really good. You guys are the only player in this space. This is a market grab. I mean, this is a land grab. You guys need to grab as much land as possible. I talked to, the CEO of PayPal and others who told us, what do you need in order to grow at this rate to hit your KPIs so that, and I said, and so we decided to open up a $5 million round. Our existing investors are taking $2 million of that round. And so there's a net $3 million open. We've raised another 500K since that time. So there's about $2.5 million open today. And that's what we're looking to close.
How many other competitors are there out there right now? Or
there are no competitors out there that do this. There's a brand new company. They have, I think, 1 or 2 employees, and they've raised $500,000 called Givesy. They do not do this, but they do something similar where they don't really do something similar. They basically just take a donation and put it on a credit card. So I don't personally see the value of it, but they're the closest thing basically to what we do. They're brand new. They have 2 employees. They're very small. But other than that, we do not have any competitors.
Any more questions, Akeel?
not for now. I might jump in a bit. We got a couple of minutes.
Okay. Jordan, how about you?
Yes, sir. What was your revenue last year?
Zero. We've only been live for 90 days.
Okay, and I'm looking at your revenue slides. EBITDA, you look like you're profitable to the best of my ability to read your financials. Is that right?
This is 2023. In 2023, we will be profitable. Yes.
Possible.
Yes.
And then 13 million. You're raising 5 million on top of that. You need the 5 million to get the 13, or you're gonna
No. We've raised 10 million already of the 13 million.
Okay, you need the rest of the 13 to get to 13, or are you good as is?
No, we just need 3 million. We're raising a total round of 13 million. We've raised 10 of it already. So we only have.
I'll ask a question differently. The 13 million you're projecting next year, is that including a total of 13 million raise or 10?
That's including 10.
Okay, so the 3 extra million, what would that get us?
In terms of runway or ownership or
all of it. Yeah.
In terms of runway, that gets us to our Series A. We do not need to do a capital raise again. That gets us to our Series A and then some. It gives us about 16, 17, 18 months of runway, something in that range. And we've raised, our last capital raise was done on a safe note with a 30 million pre-money cap, and we did not change the valuation. So it's the same valuation as the last round.
So you do, this is forgive me, this is a safe note or an equity round?
A safe note.
Safe note as well at 30 million pre-money. Is there a discount?
No, there's no discount.
Okay, and it converts on the Series A.
Yes, it converts on the Series A. And we've actually had several Series A discussions just because some of our existing venture funds, do Series A and Series B. And they've been pretty candid with us about what KPIs we need to hit. I mean, I have a very, I would say, comfortable understanding of where we need to get to in order to hit our Series A.
Yep.
And I'm highly confident that we'll be able to get there even with doing half, or actually I would say a third of what is projected here. So if we did a third, if we were off by 2/3 or 66%, we would still have a buffer to hit our Series A with considerable space. So
Check. I don't want to cut you off, but I got 3 minutes. And the market you go on, the geography, is it US or North America only, or are you going to go overseas eventually, or does it matter?
It's the United States. The United States is by far the most philanthropic country in the world. $500 billion of donations every year. It dwarfs every other country by a factor of 10. It's enormous. Okay.
Is there any churches or any religious programs that would help you bring in more customers from a?
Oh yeah, we have a bunch of churches that are clients, a couple synagogues. We just signed our first mosque. Religious organizations are the largest sector of the nonprofit space, actually, in terms of where donors give their money to, followed by education. So we actually have a bunch of high schools as clients as well. But yeah, we definitely have a lot of religious organizations.
Any franchising models? Any different lines of business to occupy? Uh-huh.
Yeah, we're doing a factoring product, similar to how Pipe does factoring for monthly subscriptions. We're factoring monthly donations. The largest payment market in the US, everyone thinks it's subscription fees. It's actually monthly donations. Last year, of the 500 billion that was donated to nonprofits, half of it was done on a monthly subscription basis. So if we can factor that, that provides enormous value to the nonprofits by providing them the capital up front, reducing the risk, and then we can sit back and basically essentially take an interest payment on the collection side. So yeah.
So you are holding on some of the cash and making some interest on it.
Well, when I say we, our bank, but we're it's technically not interest. It's a fee that the nonprofit pays. But I have to be careful because bearing loan, the nonprofit pays, but it acts equivalent as an interest rate.
What's a good minimum check size to get in the 3 million that's left?
Our minimum check size is 100,000.
Very well. I like what you're doing. I didn't like the slides, but when you talked, you convinced me. So I'd love to talk to you.
Thank you.
Dominic, just one question. So you call it, fees rather than interest. You're charging almost 12 to 17%. What's the risk around that if interest rates are going up or decreasing or vice versa?
We're not coupled to interest rates, yeah, because so it is explicitly not an interest rate, and obviously we structured this LOSA, which is our bank lending agreement, when interest rates were 0 effectively, and now they're I think 4 or 5% or something, and we've had no fluctuation in our change, so we're locked in on these rates for 3 years. But we've talked to our bank, and our bank has said these are not coupled to interest rates because they look at this as like a fee that the nonprofit is paying that's not connected to the interest rate because it's not an interest payment from a donor. And they also, the other thing is, unlike a traditional buy now pay later company, and this is the very cool part, in a normal BNPL product, the consumer pays the interest payments over time. In our product, the donor, because the donor is not paying, once the money is sent to the nonprofit, the bank automatically pulls back that 12% right away. So the full merchant discount rate or interest rate or whatever you want to call it is paid immediately. So the principal risk on the loan is significantly less. It's just the principal of the risk of the loan rather than the interest payment as well. Normally the interest payments drip in over time as consumers pay. In our model, the bank gets paid up front and then we split that fee with the bank. And also one other quick thing just for 1 second. It's also a fixed fee in the sense that it doesn't change based on the size of the loans or the length of the loan repayment. And 67% of our loans right now are being repaid every 3 months. And so you can recycle those 4 times throughout the year. So that 12% can actually get recycled 4 times throughout the year. So the actual total amount that the bank is making is considerable, which is why we got such a big facility from them.
Great. We had 2 questions from the audience. Has the IRS given you a written opinion on the donation date issue?
Yes, this is approved by the IRS.
Okay. Next one is the U.S. philanthropy market is huge. Have you thought of other markets? If so, what?
I mean, the BNPL can be applied everywhere. The closest market that we're looking into right now is tuition payments for schools and universities, because those are 501c3s, the vast majority of them. And we've actually had requests from some of our colleges and high schools, for example, saying, hey, it's great you're financing donations to us. Could you finance tuition payments? Because, we have people that basically can't pay this. And for us, it's easy to do because we're already set up to do that because they're already 501c3s and nonprofits. And also then things like labor unions and dues as well for 501c4s, we can also finance those as well. So yeah, there are sort of derivative products that we have.
Great. I think that's the questions we have for now, Dominic. Thanks so much. Appreciate your giving that to us. Before we give our final presenter up, I wanted to go back through and make sure we introduce our investors. I jumped that earlier on. Jordan, can you tell us a little bit about yourself and your group?
Certainly, sir. I'm Jordan Wahbeh with Silicon Valley Venture Group. I'm also a partner with Network VC. Silicon Valley Venture Group and Network VC, pre-Series A, Series A, sector agnostics. The chapter I run, we only work on things that improve the human condition. So B2B, B2B2C, local in the US, C corporations is our preference. We write checks in the upwards of $300,000 to $500,000. And we like convertible notes and as well as equity. Occasionally we do SAFEs. Been in business since 2015, and I'm so glad to be at your event finally, Mr. Hal.
Great. Glad to have you here with us as well. Thanks so much. And Akeel, can you tell us more about yourself and Horizen Capital?
Sure. My name is Akeel Jabbar, partner at Horizen Capital, based out of Canada. So our expertise is B2B SaaS companies. That's what we like. That's what we invest in. We look at companies doing at least generally at least 1 million in ARR, so closer to Series A round or above. Yeah, we do mostly growth equity rounds. So this is kind of interesting model, a little bit early, but I think could be an interesting business for us.
Great, thanks, Akeel. So with that, let's go ahead and switch over to our final presenter, Tim Southerns of Digital Water. Tim, if you go ahead and launch your slides and kick off for our final presentation.
Great, thanks, Hal. Thanks, folks. Dominique, that's totally amazing what you're doing. I'll just say that right up front.
Oh, thank you so much. That's very kind of you. Thank you.
Yeah, no, it's great. We've got friends up here who it'd be interesting to connect you to tell you what they're doing up here. It's called Give Some. You can look it up.
I know
Canadian.
Give Some.
Canadian.
Yeah.
Okay. Yeah. So, all right.
Cool.
Enough about that. Anyway, thanks for having me today, Hal, and fellow investors, fellow founders. So my name's Tim Southerns. I'm the CEO and founder of Digital Water Solutions. In 2022, we were named the vendor to watch at the Smart Water Summit. And we were also named one of the top 50 clean tech investable companies in Canada last year. So what's the problem we're trying to solve? Well, first of all, there's a number of customer pain points. Water loss in systems, water main breaks, low system pressure, visibility in plastic or PVC pipes, and the adoption of technology by water utilities. There's a cost associated with this. In the United States alone, water loss, meaning water that's actually leaking from the pipes, not water that never makes it to the consumer, is about 14 to 18% of all water produced. That water costs about $4 billion US annually to pump and to treat. In terms of water main breaks, there are approximately 850 water main breaks daily in North America, costing $8.5 million a day to repair them. Low system pressure can lead to compliance issues, people being annoyed with the water utility, and customer satisfaction. In terms of visibility in PVC pipes, one of our unique selling features is that we're the only technology that's capable of identifying leaks in plastic pipe today. And in North America, 100% of all utilities, despite the age of their pipes, have been replacing ductile iron and asbestos cement pipes with PVC. In terms of technology adoption, you're looking at over $100,000 a year to hire somebody as a water utility to deal with analytics and advanced AI. Today, the state of the industry is this. A lot of technology out there is what we call lift and shift. Somebody goes out in the field, they place devices on all of those blue dots, whether that's a valve on your front lawn, whether that's a valve chamber, a fire hydrant, and they listen. They listen for vibration in the pipes. So you can imagine this might work well with metal pipes, but it certainly isn't going to work with plastic where the vibration is muted and really attenuated. In terms of our solution, we're trying to have an always on solution, one that's permanent, not overnight, not lift and shift, but rather is listening to the system all the time. Our technology is implemented using hydrophone, basically a microphone for underwater. This hydrophone allows us to spread our devices out. As you can see here, some 10 units would cover the same area as those blue dots on the map. Not only that, it's in the system all of the time, listening all of the time, finding leaks early, and allowing water utilities to save millions of dollars. In terms of competition in this space, the lift and shift technology includes companies like Fido and Gutermann and Camstrop in terms of full-time sensors, Ecologics, and iHydrant. None of these is currently doing the water column sounding that we're doing. In terms of our technology, we have two components, a hardware component and a platform component. In terms of the sensors, we install in the water column directly so that our hydrophones are listening to the noise caused by leaks and are able to identify leaks of different sizes and also of different velocities. In terms of the platform, this is where our AI and machine learning algorithms live. We're able to process the data from our sensors, but also data from other sensors and other systems. So we can process data from somebody's control system, we can process data from their metering system, and we can process data from our competitors' systems. In addition, we allow our clients to upload data. So we don't need to connect to it, they can upload it themselves, immediately issuing alerts when systems start to fail in the water utility. In terms of data integration, while we don't need it because our AI is completely autonomous, we can also import data from GIS systems. We can also import data from weather systems and other publicly available data sets. The beauty of our AI is it's plug and play. We put our system in and we start listening for leaks immediately. While most AI and ML systems require reams of data to be able to actually start providing insights and results, our AI actually is unique in that once we put our system in, the next day we're able to identify to water utilities if they have pre-existing leaks within their network. Obviously, the accumulation of data over time allows us to identify leaks as they occur as well. However, this way our water utilities can actually resolve leaks that exist and then begin monitoring for new leaks that might occur over time. The benefits, so imagine if we could reduce that water loss by 50% in North America. Well, that alone would have a $2 billion a year savings in terms of electricity usage, not to mention the reduction in greenhouse gas emissions and other savings related to chemicals and overtime. In terms of water main breaks, if we could reduce that by 50% through early identification of leaks, we could significantly reduce the annual cost of repairing those breaks. Low system pressures, being able to avoid compliance issues and regulatory issues, as well as reducing customer complaints is a huge win. And in terms of visibility in PVC pipes, because all of the water utilities in North America currently have PVC pipes and are continuing to install new PVC pipes in subdivisions, and because our technology is the only technology on the market today that can actually detect leaks in that material, we believe that we're in a unique position to help the water sector. In terms of technology adoption, this is plug and play, out of the box AI ML for our clients. We do all the work, we issue the alerts. They do not have any need for a specialized technical person on staff. In fact, we ran a pilot last summer with one of our clients, and he said that we were able to find 100% of the leaks in the pilot trial. In fact, we put your units in areas that are hard to find, PVC and plastic pipes. We couldn't find leaks with other sensors that were within 10 feet of their devices. In terms of traction, today we already have our systems installed in 25 water utilities and growing. These include places like Milwaukee Water, City of Atlanta, City of Toronto, and Montreal, as well as on the west coast of Canada in White Rock, BC. Our last client that is of interest and people like to go for site visits is in Iceland, one of our early adopters of the technology. In terms of the market size, in Canada and the US alone, according to the EPA and the government of Canada, there's approximately 155,000 water systems. Of those, 52,000 are within our market space. These are the full-time residential systems, not the transitory campground systems that are included in this count. That would result in a $104 billion industry with a $5 billion ARR. Not only that, we've started to look at other avenues. When we talk about our line of business, while it's water today, the technology that we're using is equally applicable to liquids and gas. We've been exploring opportunities in the Middle East with gas pipelines and oil pipelines. So today our line of business consists of Hydrogen AI, which is doing leak detection, transient detection or water hammer, pressure monitoring. We also provide commissioning and project management services for our clients that require it. In terms of our competitive advantage, our group has deep domain knowledge. I have over 30 years in the water sector, in the consulting space, in the data analytics space, and this is the third company that we've been involved in creating. We have a patent portfolio that we're building out to increase our moats. We have trade secrets within our software, and we have some essentially unique product features such as plug and play, all pipe materials, and the ability to sense leaks over significantly larger distances than our competitors. Our team consists of people from the water sector. Our senior technical advisor is based out of UCLA. Dennis Muty, one of our directors, is a water treatment and hydraulic specialist. And Don Plouffe is an operations manager from a local water utility and the original inventor of the hardware. Our CTO has extensive experience in AI and ML applications, not only for water columns and that, but also for machine learning. In terms of advisors, we have a number of advisors involved, helping us with our business plan, our AI, our go-to-market strategy, and also with seeking investments. So in terms of our go-to-market strategy, we intend to go to market as data as a service. While our initial model was a CapEx operational model, because of water utilities' need for those two wallets, we're migrating to a data as a service model, which is basically going to result in a 12 times increase in our recurring revenue on an annualized basis. In terms of the use of funds, because that's what we're here to ask you for, we're looking to penetrate the US market in 2023. We're going to be looking to build out our rep network and bring somebody on board to head up our US sales team. We're also going to be increasing our marketing presence, our technical team, and looking to enhance our manufacturing processes to drive costs out of our hardware. The ask, so we're currently in the middle of a seed round. We're looking to raise $1.5 million. Of that, 20% has already been raised. That's on a pre-money valuation of 4.5 million, and we're offering common shares to investors. In terms of exit planning, we've looked at a number of other exits in this space, and we have some strategic buyers that we've been discussing opportunities with, including hydrant manufacturers, large water utility companies such as Veolia, Suez, GE Water, and Xylem. Thank you very much. Tim Southerns from Digital Water Solutions.
Thank you, Tim. We had a couple of questions come in from the audience. The first is, how accurate are the sensors? What kind of false positives do you see?
Sure, great question. So in terms of our sensors, we're running more than one model in terms of the AI and ML. So we are about 80% accurate today with our original AI ML. Our second generation of that we're taking to market is about 95% accurate for detection. And depending on how we space the devices, that will determine the accuracy of our localization. So obviously, the further apart they're spaced, the less accurate the localization will be.
Next question is data from the sites in use. Any adopted for system-wide coverage?
Nope, currently we haven't got full adoption for system-wide coverage.
Okay. And have you ever talked to Pemex? They have a big problem with pipeline drillers. Would this help there too?
Any kind of leak that occurs within a pipeline, this sort of technology would help.
Great, thanks. Anybody else in the audience has a question, go ahead and post it, and we'll go back to the panelists. Jordan, what are your thoughts there?
Talk to me about your fundraising. You're looking for 1.5 mil. How much of that is in the bank?
So we have 340 in the bank. We've done a partial close to this point to make sure we've got the funds to move us forward.
Do you have due diligence done on this?
Due diligence should be completed shortly. It's being done by 2 groups, but the main one doing is Kretsu Angels.
Okay, which chapter?
That's out of Toronto, Canada.
The Canadians again? Damn it!
The Canadians again, I know. It's
what
terrible.
are we gonna do with you Canadians? We just annex you and get it over with. What's your next round look like?
Probably the next round would be a Series A that would likely occur if we need to do it in 2024.
Oh, wow, that way out. And tell me about the IP, please.
Yeah, so the IP, so we do have a patent for the hardware device. We have 3 other patents that we're currently just finalizing for submission with our legal team. And in terms of the software, we have that protected through a number of means within our organization. So only our CTO has access to all of the code at any one time, and myself.
So what happens if he dies?
Yeah, so it's all within a repository. As I said, I have access to it as well. So it's there. The idea is that we're trying to keep certain parts away from junior members of the team.
Got it. And Akeel, jump in whenever you want to, but a couple of questions on my side. What's the scalability of what you do? What's the total cost of ownership? You know, for every mile of pipes or something, how much money they need to spend to be a user of yours?
Yeah, so for every mile of pipe that they're looking to cover, it's about $250 a month.
And what's the ROI on that?
So in terms of their return on that?
Yes.
Yeah, so their return on that, so when we ran the numbers for a number of utilities, particularly in Canada, it's about a 3.5-year return.
Wow. And what's the ROI for you on that?
Ours is quite good, actually. So we base our data as a service plan on about a 2.5-year financing, and we require a minimum of a 3-year contract from the clients.
Okay, and is this only for the Western world, or can it apply overseas and in other countries where things aren't so sophisticated?
Yeah, it can apply in other places. It's all on a cellular backbone. Everything's updatable over the air in terms of the firmware and that. So we don't actually need people on the ground once the installations are complete.
Okay. Well, just for the record, water is going to be the #1 source of wars in the world for the next 25 years. So
well, that's why we're talking to the Americans and trying to make peace through investments rather than having you take the water from Canada.
I'm going to turn it to Akeel and then come back if he has.
I think it deserves a little break there. Yeah. Tim, what does just looking at your cost? So it looks like you charge about $10,000 per unit that you install. What does kind of maintenance look like? How often do you have to maintain this, and what does the cost look like there?
Yeah, so that's under the capital cost model that we're going to market with when we first started, right? To get some initial uptake before we switch to the data as a service. In terms of maintenance, there's no maintenance required. It's got about a 10-year lifespan, the devices. The only thing that a client has to do is once a year go out and swap a rechargeable battery that's accessible above grade.
So does the sensor lose any quality over time, or is it just the battery that you have to switch out?
Oh, it's just battery you have to switch out.
Got it. Who are you mostly selling to? Is it the city, or is it the kind of the water?
Yeah, so we have two groups we sell to, right? Is municipalities and water utilities that are publicly owned, and then we also go after the private operators, such as an Epcor, American Water, Veolia, those types of companies that are actually under contract to operate systems.
Hal should ask you about how we're going to use the data, but if he doesn't, I'm going to do that because he just came out of a session about that.
Yeah,
So
it's okay. Hal already raised that with me previously. So, so a couple of things. One is obviously as we collect the data, it provides, it improves our AI and ML across the board. But secondly, pipe manufacturers, pump manufacturers, and that want to know what's happening with their systems when they put them in. Are they causing any issues for their water utilities? So we are going to be looking at how we monetize that and sell it back to the manufacturers of both plastic and metal and AC pipe, as well as pump manufacturers and that sort of thing, to help them provide a better service to the client.
give me a quick sense. Every, I don't know, X square miles, how many units would you have on average?
Yeah, so we space them approximately 3,000 feet apart. So depending on the grid, you might have 10 units in a square mile.
Is there a utility for your sensors other than sensing what it's supposed to?
So yeah, so I mean, the one
You're
we
laughing
have,
way too hard to make me feel good. So what's
no,
going
yeah,
on?
yeah. So one of the uses for the technology up in northern Canada is actually frozen services and frozen water mains. So that wasn't something that we had envisioned originally, but we do have temperature sensing in our solution, and so we're able to do that. We're also able to do a whole pressure capture for our clients, and what that allows them to do when customers call and complain about the pressure in the system, or call to complain about, you blew stuff off of our taps through high pressures, and that the water utility has all that data to be able to say, no, it wasn't us.
Okay, so I invested in a company that did water management for flooding and so forth up in close to you. I would love to talk to you some more. What they did something, and eventually it evolved into a completely different, but same network of information gathering. So Hal, you have a good one there.
Great, thanks. Yeah, it is a good one for sure. Akeel, any other questions from you?
I think that's all my questions right now.
Well, I have a couple more then.
I know you do. Go for it.
The devices you're building, what's the sophistication level of these? Supplies, components, hardware, materials, rodents, all that crap.
All that crap. Yeah, so sophistication, I mean, the secret's really in the sensing technology. It's typical printed circuit board. We've got some onboard. We do have some onboard code that does some sampling of that and down sampling of the data. But in terms of manufacturing, we have multiple manufacturers for each component within our system, so that if we get hit with too many supply chain issues, we can modify that. We also know from talking to our suppliers that as we up our volume, there's probably about a 45 to 50% reduction in the cost to produce the devices.
Okay. And let's check your revenue out real quick.
Yep.
Where is your revenue slide?
Yeah, so yeah, we didn't show it. We just showed you the start. It's hard
Yes.
to see on the bottom right
No
corner
worries.
there.
What's 22, 23, 24, and 25, please?
So 2022, which we just completed, was 540,000. We're looking at tripling that this year in 2023 to 1.5, and then we're looking at 3 to 4 million in 2024.
Is this with the 1.5 million raising or without it?
That's with the first 500,000 we're raising.
Okay, so for 500, you're gonna hit 1.5 and 3.4, and then the other one would that other million take you further, or that's good for now?
Well, we believe the other mill will take us further because it's going to allow us to add a couple of patents to our portfolio. It's also going to allow us to more rapidly penetrate the United States, which is a much larger market, obviously, than we have in Canada. And so our goal for next year, having that money would be to rapidly deploy into the United States in terms of marketing and sales.
The balance in revenue between hardware and software in year 2 and year 3, 60-40, 80-20, tell me more.
No, so the balance between hardware and software, if we continue on the CapEx, OpEx, which we started, is quite significantly hardware based, sort of 95%. If we go year one, as we move to data as a service, it's going to be year 1 to 3 would be roughly 90%, and year 4 and beyond would be 100% recurring revenue, no hardware.
Okay, I know we're out of time. We'll chat later, man. Pleasure to meet you. Even though you're Canadian, we still like you.
I appreciate that. Thank you.
Great. One last question from the chat box, guys, is,
Sure.
Does your technology transfer easily to oil, gas, chemicals applications? I think you said yes. And do you have any trials with companies and utilities in those industries?
So presently, we don't have trials with companies in those other utilities. It's on our R&D roadmap, but we are trying to stay focused on our original marketplace. I am seeking funding from a group over in the Middle East to potentially look at oil and gas.
Great, thanks. Well, I think we're at the end of our presentations. I want to thank our presenters, Tim and Dominique and Aaron, for presenting today. I want to thank our investors, Jordan and Akeel, for joining us as well. Those in the audience, if you'd like to learn more about 10 Capital, we'll be reaching out to you afterwards with more information, and we'll be connecting you with these startups as well. So thank you guys for joining us today. For the investors, if you could log off and log on to our other Zoom, we'll do a quick debrief and go from there. Any questions before we break, guys?
Just thank you, Tim. Thank you, Aaron. Thank you, Dominique. Kick-ass job as usual.
Appreciate the opportunity, guys.
Yeah,
Thanks again.
very much. Thank
Take
you.
care.
Thanks
Thank you
much,
so
guys.
much.
We'll get back in
Bye-bye.
touch with you shortly.
Thank you. Bye-bye.